Morning, everyone. Today is the 5th of June. My name is Pedro. I'm the senior market analyst at Alphachain, and today we are going to do another weekly market analysis, as we always do on Monday. So basically, we are going to pay attention to what happened last week, the biggest catalysts that affected the market. How did the market react to it, and of course, the main focus for the week ahead, right? So what's going to be the main focus, what should be expecting from the market, which direction are we looking for the market to react from and to go to. All right, so last week it was the end of May, so we just started a new month. I hope you guys had a great month of May, and all the best for June. And as always, when you have the beginning of a month, we always have non-farm payroll on Friday, and that was exactly the biggest catalyst from last week. And during this week that we have the non-farm payroll, there's always more labor market points coming out, and we started with the job openings. It was on last Wednesday. It came out at 10.1 million new jobs created. In comparison with the last month, it was at 9.75, and the expectation was actually at 9.41. So much better data than the market was expecting, and even more than that in previous month as well. It carry on like that. So all the data in regards to the labor market, it was quite strong. Job openings, we had ADP non-farm payroll the day after on Thursday. Again, much better than expected. Expecting 173, it was 278. Even the unemployment claims, it still is in between this range, between 220 to 240. That has been like that since the beginning of April, except from one spike that occurred on the 11th of May. It was all the way through 260,000, and then another strong data from the NFP last Friday at 339,000 new jobs being created, much higher than expectation. It was expected at 193. And even the previous month, it was revised to the upside at 294, when initially it was announced as 253. Right, so positive revision in here to the upside, and it just continues. Right, so we have noticed that since April last year, so it started on in May last year, that the expectation has been always lower, or the market has always beat the expectations from the market, right? So as you can see, the expectation is basically this line, this kind of goldish line in here that you have, with the full result being the full bar. And since May last year, that the real result has always beat the expectation. In this case, again, almost double the expectation from what was expected. And all this brings the situation of what the Fed should do, right, based on all this information, because the unemployment is something that we have been paying attention to. Again, the market eventually are going to see the unemployment to increase, and the employment actually increased. It went from 3.4%, expecting 3.5, and it was actually 3.7%. This is due to the another report, which is the household survey that it's also announced on that day. That's just a different way that the market uses to calculate these reports. Just let me just show you in here a little bit of the comparison, for example. So this is how basically the difference between the household and basically the payroll survey, which is basically the non-farm payroll survey that is announced, right? So you can see a little bit of the comparison, what they include on one side as unemployed or not, even the size of the sample also that they use to come up with that number, and so on, right? Apparently there was a big increase in here in regards to the household survey, and that's why you have now this 3.7% unemployment in the US. But aside from that, the data itself, again, really strong, new jobs being created. And that kind of, again, leads to the point of what the Fed may do on the 14th of June, which is the next meeting. This was basically one of the last biggest data points that was due to be released before the meeting. The next one is going to be next week. We have CPI being announced on the 13th of June, just one day before the Fed meeting. And these odds, they have been changing. As you can see, for example, last week, it was 64% to the possibility of a new hike to 5.5%. At this point, it's back to an unchanged interest rate at 5.25, which is what we are right now. The curiosity of this is that actually the market has been pricing in another hike, but in July, not now in the next meeting in June, but in July. As you can see, there's 55% odds of another hike being at 5.5%, which is apparently some commentary from other Fed members have mentioned that maybe the Fed could stay and don't without any hiking for this next meeting, just to reassess and to see how the economy and the market, basically the economy, is going to react from all these regular hikes that we had for the last 1 year, right? So that could be one approach. So unchanged now in June, and then maybe another hike in July. Just to keep an eye again to see if there's an improvement on the data or not, or if the economy continues to be that strong, for example, like the labor market is at this point. So this is where the Fed and what the market is paying attention to. There have been some commentary as well from other Fed members. Yes, some have mentioned that, some may mention that, yes, there's maybe still room. The economy kind of looks strong. The labor market kind of still looks strong as well. So that's a little bit of what we have. Aside from that, we had the manufacturing, the PMI. Again, it was a little bit lower than expected, still below 50. So it shows a little bit of a contraction. This is what we have for the last for the last few months, right? It's been below 50 all the way since December last year. And today, actually, we are going to have the services PMI at 3 p.m. So it's going to be one of the biggest points regards to the US. It's going to be a quiet week today, this week, for in terms of important releases for the US. So there you go, 3 p.m. Services PMI. Let's see, it has been expected at 52.6. Last month it was 51.9. So it's expected another number above 50. And aside from that, there isn't that much going on in the US, aside, of course, from another unemployment claims next Thursday. So that's in regards to the US. If we pay attention to the rest of the world, so we had Australia. We can start from there. CPI being higher than expected at 6.8% on a year-to-year basis. It was expected 6.4%. And this is going to be interesting because actually overnight, so tomorrow morning in Australia, we are going to have another interest rate decision, right? So the RBA is going to announce another interest rate, and everyone's going to be looking at what it's going to happen, right? Because we know that the two previous meetings, there was they stayed unchanged. Then they decided to surprise the market that they hiked again. So at this point is at 3.85. And now that we had another inflation report being higher than expected, they may increase again. They may hike again the interest rate, maybe to 4%. If you actually pay attention to the expectation and what the market is pricing in at this point, it's actually to be unchanged, but it's going to be a big question mark. It's not exactly certain. There's maybe some probability that there can be another hike in here. We have another interest rate decision. This one is going to be in regard to the Bank of Canada. The Bank of Canada has been unchanged for the last two meetings, right? The last peak. The last time that they hiked, it was in January. And since January, they have remained unchanged, and it's completely expected to stay the same at 4.5%. However, there's a little bit of a concern as well that it may there's maybe room for another hike, but maybe it's just in the next meeting as well. Again, it's a lot of data dependent, depending on what the new data is going to show, how the economy is reacting to all this situation. So those two in Australia and Canada, that's the central bankers decision. Next week is going to be a busy one, right? Next week on the 14th of June, we start with the Fed. 15th of June, then we have the ECB, and then on Friday morning, we have BOG also announcing another interest rate decision. Carry on from last week, we had quite a few releases in the Eurozone. So we had also the CPI in the Eurozone, which came out lower than expected. That was good news for the euro. Where is it? Am I missing in here? Was it Wednesday? Maybe I'm missing it. Yeah, CPI, Eurozone. Yeah, it was at 6 point. For some reason, I'm missing the data in here. There you go. So it was on Thursday. Yeah, there you go. 6.1%. It was from 7 to 6.1. It was expected 5.3. Even the core CPI also decreased to 5.3%. That's good news for the Eurozone. However, the overall data point regarding the PMI manufacturing across the Eurozone and some other data points in the Eurozone, they haven't been that good, and our focus is going to be as well this week for new economic data points. Right, we already had services PMI this morning in across many European countries, with being slightly lower than the previous month, still above 50, but a little bit of a concern in there to find out as well if there's going to be concerns of recession or not in the Eurozone in the next quarter or so. Yes, aside from that, the remaining of this week, we are going to have unemployment in Canada, and that's it. One last point, or two more points, it is actually regarding to the oil market, right? So we had another OPEC meeting happening this last weekend. And apparently there's another decision to cut productions, right? So another 1 million barrels per day that has been cut in order to reduce the supply side, not the supply side, but the supply side into 2024. So it has been it's basically another addition since that 1.66 million barrels that was announced in April, and we had a big spike occurring over the weekend in the oil market, price going all the way closer to $74 per barrel. So that's another one. They want to apparently try to increase the prices in the oil market. And aside from that, we had, of course, the debt ceiling situation that has been solved, right? So President Biden has signed the legislation. So that's it. Pushing now the next time that we're going to have this concern regarding to debt ceiling all the way to 2025, which we'll see who's going to be the president, US president by then. One of the main concerns in regards to the treasury, right? Because they need to basically refill their own reserves, and the question mark is how are they going to do it? Are they going to do it by using in kind of reducing the bank excess reserves, and this could drain the liquidity in the banking system, or are they going to use it by decreasing the reserves repo balances, which kind of would transfer the liabilities into the Fed's balance sheet, but in this case, it wouldn't really affect the liquidity in the market, right? So it's just to see if they're going to have any concerns or any effect in liquidity in the market, which can lead another situation or bad situation to the minor banks in the US, maybe resume a little bit of the issues that we had since March in the banking system in the US. Now, looking at the market and what we have, right? So quite volatile. Overall, we had the dollar moving to the upside until Thursday, where it finally moved slightly to the downside. And yesterday and last Friday, with the non-farm payroll, we had another move to the upside on the dollar. Now, question mark is, are you going to resume the move to the upside and eventually break this, create new highs, or are you going to find, or are you going to find any kind of resistance a little bit around this level and maybe push price to the downside? That's a little bit of the question that's going to happen in here. Looking at the dollar, we have these highs all the way since the beginning of March, all the way to these lows in the middle of April. The month of May has been quite bullish on the dollar, and we may have price continuing. Personally, I think we may go a little bit closer to the upside, maybe all the way until there, but we may have some kind of reaction from here first. Let's see. This on itself, it was quite good. Price reacting from this level. If you guys remember, this was also in alignment a little bit with the target, the initial target that we had for these longs, right? It will be kind of to feel this compression here. So that we reached that level, we actually broke it, but this level alone can still be quite interesting. And it was last Friday, as you can see, price had a really good reaction from here, and you may resume the move to the upside on the dollar. So yeah, let's see what's going to happen. Where are you going to be by next week as well, and closer to the next Fed meeting? Yep. So somewhere in here is going to be interesting. Are we going to approach these highs from March, or by the chance you're going to have a little bit more of a retracement and maybe getting closer to this level in here? Personally, I think we may get closer to that level before moving down, but let's see what may happen in here on the dollar. And then we have the indices. So we pay attention to the S&P and then NASDAQ and then the Dow as well. So starting with S&P, like the indices have been quite bullish, maybe also due to agreement and the solution that they found towards the debt ceiling, and NASDAQ in particular with enthusiasm regarding to this AI situation that has been quite bullish and affected the major tech companies. So let's see what's going to happen today. There's also a big event where Apple is going to announce new products. So let's see also how the market's going to react to it, and for sure it can also affect the indices, in particular tech, but also the S&P. So let's see. So here we are, S&P that is now reacting from these highs in here from August, something that we have been looking for quite a while. The way price is actually moving, it looks quite strong. So there's no reason even to look for any sells until kind of price starts showing some kind of weakness. Otherwise, S&P may actually follow what what NASDAQ and even Dow did, and they're going to just break complete with these highs in here from August and maybe going towards to the next level. Just to have an idea, at this point, NASDAQ I think is kind of reacting already somewhere in here, and S&P is still in here. Right? So S&P is literally lagging comparing to the NASDAQ. So yeah, we are getting to this level in here. Price has been quite bullish, compressed a little bit, gaining some momentum right now, in particular last Friday. So yes, are you going to find a little bit of resistance in here? Personally, I think we may, and the way actually price has been approaching this level, we may actually go higher, and you may have actually some kind of reaction after we break this high, or maybe after, maybe take that liquidity from that high, and after that we may have a little bit of a move down. Meanwhile, if by any chance intraday, if we break below this level or something like that, we may go a little bit higher. You may have maybe a little bit of a reaction from this highs, and you may react from here. afterwards. So let's see if by any chance we break this low, maybe we can something like this, and maybe then resume the move to the upside. Nasdaq has been quite bullish as we know. So has already broken these highs in here, right? The same highs from August, and now it's moving all the way to there. So let's see, my next zone may be in here, and maybe even can go a little bit higher. It's been compressing a little bit, but not exactly breaking any lows either. So let's see what's going to happen this week. It's quite bullish. There has been some opportunities to either go long or short. Of course, the long setups, they can be managed in a different way, because we can even maybe extend your own targets. But even during the week, there has been a little bit of a few opportunities to sell as well along the way. So that's kind of where we are. Maybe more momentum to the upside. I'm looking for price maybe to get to this level, and eventually we can even target this double top in there. And then we have also Dow. Dow has been quite really strong move last Friday. We approached this level in here, and after that we kind of moved to the upside. On the daily time frame, it was a good zone in here where it reacted from, and now kind of resumed to move upwards. So it's getting closer to a level that I was looking for personally, a little bit somewhere in here. So now let's see how price is going to react from there. We just took these highs, and I'm curious to see how price is going to react eventually from there, either from here. Let's see if we're going to create even more momentum to the upside, or just some reaction there and then resume the move down. Right. So let's see what's going to happen on the Dow. And then some others pairs that we like to look at. For example, we have the Euro Index, right? The Euro Index that initially for many weeks it was trading around this range. We finally managed to break a little bit to the downside. Now we're testing the next level of support somewhere in here, and let's see what's going to happen next. Are we going to resume the move to the downside and eventually maybe getting a little bit closer to these lows, or are going to eventually break above this level, maybe target trying to go higher? Don't forget that you're going to have maybe in 10 days, we are going to have another ECB. The last ECB meeting, it was around this level. Usually during ECB, we may have the euro moving to the downside. So it's going to be interesting to see what is the Euro Index actually going to do until then, and then let's see if you're going to have another momentum to the downside or not after that meeting. So let's see, in the next 10 days, going to be curious to see what the Euro, and in particular this Euro Index, is going to do. And then you have the Yen Index as well. So the Yen Index, it's going to be interesting to see what's going to happen, right? So we have, and it has been to the downside, right, the yen, and on the other side we have dollar yen moving upwards. One point to pay attention to is that we are starting to get really closer to some levels where the BOJ last year decided to intervene. Like in regards to the dollar yen, it was when dollar yen reached the 145. That was the first time that the BOJ intervened. That was around middle of September last year, and then there was the initial big reaction to that, which was in this case on the yen index. It was around this level. It was around this level in here that you had initial reaction, kind of middle of September or something like that. And then the second one, price then kind of decided to even go a little bit lower than that. And then you had the second and even the third straight after that, that finally managed to push the yen to the upside, since it has been moving down quite strongly. And we are getting closer to those levels, as you can see. So if we actually draw kind of a horizontal line in here, we are getting closer to those levels, which starts to be the conversation again. Is the BOJ kind of trying to do, will the BOJ try to do something if the dollar yen gets closer to those 145? In this case, the yen index may be closer to this 795 or something like that, right? So that's going to be the interesting part. And something to be aware of in case this yen index gets closer to that level. At this point, we are still reacting from this low. We respected that high. So let's see what the yen index is going to do from there. And on the other side, in my looking at the chart, my favorite zone is actually somewhere around this level, which kind of is a little bit in between that intervention. So from here, maybe there's a big reaction in case price actually goes there. So that's something to keep an eye on. Again, BOG, we're going to have the interest rate decision also next week. So let's see what's going to happen by then. Looking at the individual currency pairs, we have euro, right, doing basically the opposite that we have seen on the dollar index. We had initial move to the upside Wednesday in the evening, then a really big momentum on Thursday, and then kind of the correction to the downside on Friday with the FOMC. So bigger picture, maybe a little bit in alignment to dollar index. I could see euro maybe going a little bit lower, similar that I could see maybe dollar index going a little bit higher. But meanwhile, there's maybe some zones in here that price could still respect and maybe push price a little bit higher, right? So let's see what's going to happen. It's a little bit tricky, a lot of compression on the way down. The zone where it respected last Friday, it was maybe okay. So let's see, are we going to resume the move down? Are we going to have a little bit of a correction and then resume the move down? Let's see if that's going to happen. Again, let's see where the euro dollar is going to be by next week during the FOMC, and then in more particular the ECB, right? Because again, last ECB, it was in here 4th or 5th of May, and we can see what happened to the euro since then. So curious to see where the euro is going to be by next week. Then we have the pound also. So pound basically respected that level that we talked about. Then we have been quite bullish, and it respected one of the targets, which was basically this high that pushed the price all the way down in here. So all this was compressed. And during the FOMC, during the NFP last Friday, it decided to respect it. So it respected the zone. It didn't break it to the upside. It respected it. So we may actually continue to move down. Let's see what's going to happen if price is going to find another level of support below these lows or not. So that's going to be one of the key levels. Otherwise, price may actually just continue to go a little bit lower and even resume to move to the downside. Since we never really broke the highs, maybe price actually going to resume down. If price had broken this level, maybe it could have gone a little bit higher than in the future. We'll see. It's going to be interesting to see how the pound dollar is going to react somewhere from there, and if it goes up again, let's see if there's more orders in there that to push price down. Again, at this point, it's in the middle. So let's see what's going to happen in there. Meanwhile, the euro pound that has been quite bearish for the last couple of weeks, it finally reached this level of support, right? We have all these lows in here, and we find some reaction to the upside. So maybe we can go all the way through the next level of support resistance. It will be somewhere around this level. So this is kind of a good traditional move to respect this level of support after such a bearish momentum, and now kind of resuming a little bit. And let's see what price is going to do from there. So that was maybe a good opportunity that was created last Friday and this morning of seeing this level to go higher, maybe until there or even a little bit higher. So that's a little bit of the euro pound that we have. Then you have Aussie dollar, right? So Aussie dollar, which has been quite in a range for many months. Then we finally break below, and kind of we got really closer to this previous level of structure. And now we corrected all the way through to react now from the previous level of support resistance as well, right? So a little bit traditional moves. Let's see how price is going to react from here. Eventually, are we going to continue to move to the upside or not on this Aussie dollar, or are we going to eventually resume to move down? Personally, yeah, we may even go a little bit lower in the future, but let's see now what price is going to do within this level. It's been quite in a range during these last couple of months. So yeah, curious to see what may happen in here on the Aussie dollar in there. And then we have the yen pairs, right? And the yen pairs is a little bit in alignment of what we mentioned with the yen index by any chance. So we have been moving a little bit to the upside. We respected this level in here. So the two zones that the intervention occurred, the first one, it was in here, right? When it got around that 145 mark. This was, again, back in 22nd of September. So that was one of them. And then it was, again, at the highs when the dollar yen reached the 151, almost 152. mark, and we had kind of one, and then I think the day 1 or 2 days afterwards we had kind of another one, and that was enough to finally push this dollar yen to the downside. So yes, it's going to be curious. This is actually quite an interesting level. If by any chance price decides to and it regains that that zone, the 145 again, that can be a good opportunity to maybe look for sales on the yen. Good reaction to the downside until this level, so it was a natural level. Then we had the move to the upside with the NFP. Are we going to resume the move? Are we going to eventually break the highs and continue? Maybe that can be one of the scenarios. We may have now a little bit of a kind of maybe creating some kind of channel in here as price continues to move higher until maybe eventually it gets there. We'll see what's going to happen on the dollar yen. We can have maybe a little bit more room to downside and a little bit more to the upside. If you do break below these lows that we just created in here, then we may have a little bit more of a retracement to the downside. Until kind of these lows respect or keep holding price, then we may continue to look for more bullish momentum and price to continue to go to the upside. So that's a little bit of the dollar yen. We look at the other yen pairs. And we have here euro yen, which is quite nice. So we move higher in here. This one in the bigger picture may be seen as an engulf down. As you mentioned, we got really closer to create a little bit of a double top in there. There's maybe even a little bit of a chance for price to get a little bit higher. So yeah, let's see what euro yen is going to do. Last week it was a good sell opportunity. We finally reached kind of one of our first targets, which was below this low. We had a reaction to the upside. So curious to see eventually how the euro yen is going to react under the test of this size, and even a little bit higher. We may have another sell opportunity in there on the yen. So that's something to look for in here on the euro yen. Then we have pound yen. Pound yen has been a little bit more bullish recently. And we are reacting from that high on the left side from 2016, beginning of 2016. So let's see what's going to happen in there. That's been quite bullish recently. Are we going to take the high or not, or are we going to just resume to move to the upside? So that's something to keep an eye on until eventually maybe have a move down. And then the Aussie yen, it's another one that we've been looking for. It reached the target that we're looking for, and now kind of price is moving higher. Let's see if it gets closer to this highs, even if you take those highs or not, right? So the move to downside that you're looking for, it reaches target, maybe can move higher. Again, maybe eventually when the yen index is ready to turn, maybe you're going to have all the other yen pairs also turning in alignment, as it usually happens. Then you have dollar CAD. Dollar CAD has been quite bearish, right? In this movement in here, it happened as well in alignment with the oil when it had that big move to the upside on oil last Thursday, if not mistaken. So we had also something similar in here on CAD, and now we are back to this level, right? So we have been ranging. We have been ranging in here for a while. Basically that's a type of a move that dollar CAD likes to do, and there you go. So basically that's where we are. We're going to resume a little bit more to the downside, getting closer to this level. Maybe that could be one possibility before maybe even resuming the move higher, or eventually we may finally break these lows. So let's see what kind of catalyst needs to happen in order for CAD to even break these lows. Or are we going to just resume? We're going to have, again, as I mentioned, interest rate decision, Bank of Canada. So let's see what's going to happen in here. Dollar franc Swiss, again, has been quite bullish. And we had a little bit of a correction, then moved to the upside with the NFP last Friday. So this is where we are in the bigger picture. We may continue to go higher. Maybe the target can be maybe this highs in here. But meanwhile, before we get to that, to there, we may have a deep retracement to the downside. My favorite, kind of I mentioned, it will be even for price to eventually get there, and maybe from here you could go all the way higher. But yeah, meanwhile, We do need to break these walls before even attempting to go that deep to the downside. So as long as kind of these walls keep holding, we may continue to go higher. So let's see what's going to happen in here on dollar franc Swiss. But maybe the target for this is actually all the way at least above these highs. Everything in here looks a lot compressed in the bigger picture. So let's see what's going to happen in here. And then we have gold, right? So gold has been moving quite to the downside, a little bit the opposite with the dollar. As we know, gold, interesting enough, right? We had taken all these lows, good reaction from that level. And then a big question mark, it would be, would you break these highs or not? And it decided to respect it. So since it respected these highs, we may resume the move to the downside, and you maybe even create new lows from here. If we had broken those highs, that could be a different story. Maybe could then aim a little bit higher, but you respected it, you respected the extreme. It was an important level from the past, as you can see here on the left side. So respected with the NFP, we continue to move to downside. It looks quite bearish at this point. You may have a little bit of a correction of a reaction from here, but overall, it looks like it may resume to move to the downside, which then let's see what's going to be the next key zone in here on gold that price can maybe react from. Are you going to aim all the way to this level, 1,858 or 60, something like that? Maybe then target these lows if you do manage to break below that zone, right? And it makes it this triple top in here quite strong. Yeah, let's see what's going to happen on gold in there. Of course, keeping an eye also on the dollar and what the dollar may do that can also help. And then you have oil, as we mentioned, with another decision to reduce and to cut the production, in this case in 1 million barrels per day. We had this big gap to the upside. It got really close to this highs created on the 24th of September. Let's see. We had it was quite bearish last week until the end of the month, beginning of the month. Now we had this big rally to the upside. So it went all the way from almost 67 now to 74. So let's see what's going to happen next. We had our attention was at around this level, $75 mark. It's still there, so price may even go a little bit higher, close it. In this case, price with the gap went all the way and retested it. If you compare with the previous gap that we had, price didn't retest the gap straight away, right? This was the previous one in April, March. It was in March, right? The beginning of April. Beginning of April, if not mistaken, on the 3rd of April. Like, it was a big surprise. This reduction the market was not expecting. In this case, the market was already kind of expecting some kind of volatility and maybe some reduction. And as you can see, right, the gap in this case stayed open for a long time until price finally went there. So that could be one strategy, could be exactly eventually to short all the way until you close the gap. In this case, the gap was basically closed straight away in the next couple of hours after the opening for the week. And there you go, right? So let's see now what oil market is going to do. Are we going to keep ranging in between this level or not? So that's going to be interesting to see what may happen. And then to finalize and we are going to take a look at crypto, right? So this is where we are at this point. Quite volatile once again. Right, so last week we had this big rally to the upside, retesting this 28,450. It was a good zone to fake out of this size. That level in there was still fresh. If you actually look into the wartime frame, you can see exactly where this high reacted from. Bigger picture, this may be seen as an engulf to the upside, so we eventually may even go higher. But if you actually pay attention to even bigger picture, we know that we have now this bottom at this 25,790, and we have a key zone in here just underneath that level, right, at around 25,230, which was this previous level of resistance. We have actually this demand zone in here, and now we have this beautiful double low just above that level. So to be honest, I wouldn't be surprised if by any chance Bitcoin kind of attracts price towards that level, it creates this fake out of this double bottom, and it may react from this zone in here that may be quite strong, and then maybe resume the move to the upside, and now it respects this high, so actually can go even a little bit higher. So I wouldn't be surprised if eventually this could be a kind of a setup in here on Bitcoin. I think that's a potential setup. Meanwhile, we actually already kind of broke even this size again. If by any chance price wants to hold and respect this level, maybe in here can be an opportunity for today to look maybe for a long, or even a little bit underneath that, right? So again, if by any chance price wants to respect these lows, maybe something in here could be a zone for price to respect it. But bigger picture, I actually like the possibility of taking these lows, price going there, and then maybe can go higher from there, right? So again, bigger picture, this level in here is quite important to see if you're going to hold this level or not. If you break below this, then there's maybe much more room to the downside. So let's see what's going to happen, what's going to push Bitcoin eventually to the upside. Yeah, meanwhile, I have actually a zone in here, basically where price is reacting from. I already had a little bit of a lows in here, so we may have actually a potential zone in there. Let's see what may happen. And then we have Ethereum, which has been quite ranging as well. So let's see, we didn't really manage to take this high, so we respected it. This is a zone that I had it. The lows never reacted from there. So let's see. There's maybe a little bit more room to the downside as well. We are in this range, so a little bit indecision. Again, maybe shorter time frame setups is maybe the recommendation in here. At this point, it's kind of indecised as well in terms of where do you want to go. Yeah, let's see what's going to happen if we test this level and attempt again to go higher from here, or by any chance you start breaking these lows again. This range in here is quite important, at least for me. If you do break below that level, we may go much farther down. And that's basically it for this week, guys. So again, are you going to resume the move to the upside on the dollar? Yes or no? Where are you going to be by next week, where it's going to be the next FOMC meeting? The indices, are you going to continue this rally, in particular on the Nasdaq? Is the S&P going to break those highs from August? And what may happen after that? Oil market, are going to continue this range? Gold is going to move down in relation to the dollar going up. So all those situations is what you're going to be paying attention to. There isn't that much that important data points being released in terms of the US. There is a few central bankers. So let's see what's going to happen. Expect more volatility, maybe a little bit of a range, and not so much trending. We'll see. We're going to be here next week, so I'll see you then. Thank you very much, guys. Again, all the best for this month of June, and we'll talk next Monday. Thank you very much. Bye bye.